Well, it's the first trading day of the week and the second trading day of the month, and November is already bringing notable developments in the financial and telecommunications sectors. MTN Nigeria particularly is taking steps to bolster its financial position by issuing a 50 billion naira commercial paper to support its working capital. This move shows MTN's strategic push to maintain liquidity and keep operations resilient amid changing market conditions. Now, on the show today, FBN Holdings is preparing to raise 149 billion naira through a rights issue aimed at strengthening its capital base and fuel growth. This capital raise actually signifies FBN's focus on expansion and, of course, ways around enhancing value for its shareholders. And in a broader view of Nigeria's banking sector, a new Fitch report points to concerns about rising non-performing loans as high interest rates and inflationary pressures continue at this point to actually cause a bit of stifling of the economy, and we've seen that struggle go on for a couple of months now. Now, the report suggests that banks may face challenges in maintaining loan quality while signaling a potential shift in the sector's financial dynamics. And of course, the marks that we're seeing rolling out in terms of the data that we've seen play out in a couple of weeks now. This is Market Pulse on News Central Television in partnership with Nairametrics. I am Lekon Onobanjo. It's nice to have you around even as we kick the ball rolling. We begin with top stories from the global markets. Well, instead of going to the global market to see what is trending there, let's stay with the NGX market, which has continued to experience pressure this week as investor sentiments remain muted despite Q3 earnings reports, as we've seen. Additionally, global uncertainties are influencing local market performance, with the all-share index seeing a daily drop of 0.54%. And there you can see it on your screen, 96,907.98 in terms of all-share index, with a percentage of minus 0.54%. And that tells us that the market capitalization, as was tracked, was 58.72 trillion naira. So we begin to see that gradual drop again after a few weeks of gains that we saw on the Nigerian bourse. So we look at the top gainers. As we tracked, UBA tops the chart, closing at 31 naira 90 kobo with a 10% increase, followed by John Holt closing at 3 naira 63 kobo, Unicel 6 naira 18 kobo, and Sterling Nigeria 4 naira 98 kobo in terms of how it closed. PZ Cursons closed at 23 naira. Of course, double digits for the two stocks right there, single digits for the others. Quite appreciable for Unicel, I must say, but of course Sterling and PZ had 5.96% and 4.55%. We look at the top losers now. On the top table is Carverton closing at 1 naira 80 kobo, Aradel 401 naira 10 kobo, Owando closed at 80 naira 70 kobo, FTN Cocoa 1 naira 73 kobo, and Veritas Cap closed at 1 naira 28 kobo. You can see the percentage differentials there, double digits for Carverton and Aradel, that for a couple of weeks has been seeing some good fortunes now in the last couple of weeks, should I say from last week, has been on a gradual drop. But we look at the most traded stocks. Cornhall PLC with 567.24 million volume in terms of value. And of course the value is in terms of volume rather, in terms of value 822.51 million, followed by UBA 240.75 million in terms of volume. That is traded stocks with a value of 7.28 million. Sterling Nigeria 122.30 million. Sovereigns 59.43 million. Axis Core 26.14 million in terms of the value, in terms of the volume rather, of stocks traded, with a value of course at the other end of those other stocks. So we quickly look at the currency to have an idea of what the Nigerian naira is saying as of now. It has opened this week at 1,644, and you can see how it relates to other African currencies. For Ghana and the likes. Now, up next, Samuel Oyekomi, Research and Insight Associate at Northern Berger, joins me even as we begin to unpack some of the stories that we have coupled for you on the show. Stay with us. Well, it's now time for polls of the day. MTN Nigeria has announced plans to issue a 50 billion naira commercial paper to support its working capital needs. Now, this issuance marks MTN's latest move to actually strengthen its liquidity and operational flexibility in an evolving market environment. And so this evening, to further break this down on polls for the day, we have Samuel Oyekomi, Research and Insight Associate at Northern Berger. You are welcome, Samuel.
Yeah, thank you very much. Good evening. Thanks for having me.
Okay, so let's have your thoughts on MTN Nigeria's 50 billion naira commercial paper issuance. Now, many see it as a strategic move to support working capital. So how do you view this decision in context of MTN's market position and operational goals?
I think that's well in alignment. So considering when you look at the financials of MTN over the couple of quarters, last year they reported significant losses as a result of FX revaluation issues, and also this year so far they've also seen relative significant losses also to the tune of over 500 billion naira. Again, as a result of FX devaluation, and that has significantly eroded the retained earnings and the entire equities on their balance sheet. So you see their numbers are at the region of 570 billion naira, and of course you expect that a company as big as MTN will want to seek some other form of financing in terms of being able to meet up with their daily working capital needs, and I think this is quite good because the indications from their numbers in recent time has not really done well on the stock. We've seen the stock price dwindle downwards to the region of 180 per shares, shares that has hovered around 240 at some point this year. So I think this strategic move kinds of strengthens investor sentiment as much as it also improves liquidity in the company.
Okay, so with FBN Holdings planning to now raise 149 billion naira through a rights issue, what impact do you foresee this capital infusion having on the company's expansion efforts, probably competitive position looking at the banking industry?
The market has been expecting FBN's capital raise in the market, and I think it's really very much in line with CBN recapitalization plan. And if you look at with the hope of raising 500 billion as per regulations from the CBN, I think that's good. It also helps them to be able to further any expansion plans that they have. Maybe they have other countries, regions in Africa, other clients in the world that they would like to move into, spread their tentacles. So I think that's going to help them being able to achieve that. Also, it also helps them to create more assets for themselves. So you have as much capital base which you can use to chase interest income. And of course, at the end of the day, for banks, the more capitals you have with you that you can use to earn monies in terms of interest, I think the better for you, the better for your bottom line. I think that's also good for the likes of FBN. And it's going to be interesting to see how well the market is going to accept this capital raise, the level of confidence that the market have on the company to be able to push and invest as much in there.
Interestingly, now the Fitch report actually highlighted the likelihood of increased non-performing loans due to high interest rates and inflation. How significant do you think this will be for Nigerian banks? And do you think there are strategies that these banks might employ to mitigate the potential risks associated with rising NPLs?
I think that's an interesting question. The hawkish move of the CBN in recent time that I've seen our NPL move around the region of 7.25. Cost of credit has gone up significantly for the financial market system. I think that has caused a lot of high cost of borrowing for individuals and businesses, and as a consequence, that also has an impact on how well they are able to service some of these debts. So you look at numbers from the CBN, as also validated from Analytics, the non-performing loans as a ratio of total gross loans. I mean, Q1 2024 went up to 5.41 compared to average that you had last year of about 4.7, 4.8. That gives you an indication that a number of businesses are struggling to be able to meet up with some of their debt obligations with the banks. But of course, in Q2, we saw some form of recovery to about 4.12%. And I think as much as this interest rate continue to remain high in the long term, this will continue to impact non-performing loans. In terms of what banks can do, and I think they are already doing that, they probably just need to maintain that, maybe not to overshoot the threshold set by the CBN, which is 5%, as you might have seen some of the businesses already based on Q2 analysis, some of them have more or less surpassed that threshold. I think one of them is to enhance their credit risk assessment system to ensure that they strengthen their loan monitoring system to work in line with together with the likes of CBN to ensure that they're able to follow through with some of their loans, adopt some form of effective loan recovery processes. This will probably help them to be able to recover many of their loans that could otherwise be non-performing. And at the end of the day, it is bottom line that banks have that, by the way.
No, but then aside to FBN Holdings, do you think there are other, banks that might show a bit of resilience? I mean, you just help us highlight the fact that, the economy could be really choking and some businesses will be reeling from the impact. But then if you are to look at it holistically, are there other banks that are actually showing a bit of positivity in terms of the ability to meet up with probably, rebasing, recapitalization and, economic strength?
Yeah, so interesting. Looking at the numbers based on performance of some of the banks that have tried to raise capital in the last few months, the likes of Fidelity, Wema, GT. I think to a large extent they've adopted some interesting strategies to be able to ensure that they raise this capital. We see some of them as much as set targets for their employees to be able to raise as much funds for their recapitalization. I think that's quite interesting. They are not really relying so much on how the market, the NGX really performs. They're doing as much. You see some banks, even on their mobile applications, they have adverts in there where you can buy some of these shares. Although one issue that I think from an outsider I would say is the fact that many who have bought some of these shares 2 months ago, they are yet to settle. And I think that could also discourage market participants. But that being said, I think the banks have generally remained resilient. You look at their financials, look at their profit. I think one of the banks, Zenith Bank reported a PBT of about 1 trillion naira. That's following TT Bank's Q2 of H1 1 trillion naira PBT. And I think many of the banks have also seen significant growth. Of course, many of them coming from high interest income as a result of high interest rate. And again, several of those funds coming in from effective valuation gains. Don't forget that earlier in the year, the CBN had more or less directed banks to make sure they reduce their FX exposures in a bid to have in terms of their net open positions. And many of them have tried to reduce that FX liability or asset, as the case may be, in a bid to in line with CBN regulation. I think banks generally are doing well. Of course, as an analyst, you speak based on publicly quoted banks because that's the information you have. And then if you're going to speak based on that, several of these banks, I think, are quite resilient, irrespective, and they still have about 2 years or so to be able to meet up with their recapitalization, and it looks like it could still be possible.
Oh, okay, so just wrap things up now, given the current economic pressures, how could rising non-performing loans affect investor sentiment towards Nigerian banks now? And you also anticipate probably a shift in investor behavior moving forward?
I think as much as banks are able to demonstrate their capacity and ability to be able to recover some of these loans, I don't think that would so much deter investors generally, because eventually at the end of the day, businesses or investors consider the bottom line. So by the time you make your revenues and then you have allocations or you have from set aside bandwidth for non-performing loans, and then you still come up with good profitability, which more or less assures investors that there will also be dividend payments and then growth in the business. To a large extent, that wouldn't deter investors, in my own opinion. But I think that banks would also need to check that, because the CBN is also like a watchdog, ensuring that these banks maintain this prudential limit of 5%. Overshooting that does not also speak so well for the credit environment and the financial system as a whole. But in terms of investors, I would say, depending on the kind of investor that you are, bottom line oftentimes matter most to them.
Okay, all right, noted. Samuel, you come in research and insight associate at Nuremberg. It was nice talking to you at this time. Welcome to Key Metrics on Market Pulse. Today we are diving into a groundbreaking shift in Africa's energy sector. The soon-to-launch Africa Energy Bank, which is set to power up on January 28, 2025, right from Abuja, right here in Nigeria. Now, looking at the key points, Africa Energy Bank, also known as AEB, is poised to become a financial powerhouse designed to fuel Africa's oil and gas projects with the capital they have long been missing. This bank is starting strong with a massive initial capital of about $5 billion, a joint venture between the African Petroleum Producers Organization and Afrexim Bank, setting the stage for a new energy era in Africa. With support from 18 African oil-producing countries, including Nigeria, Angola, and Ghana, the AEB isn't just a bank, it's a continental commitment, as it is seen, to actually galvanize energy security and growth. So even as we look at the data and statistics right now, initial capital base about $5 billion. The membership is about 18 African oil-producing countries, and the operational launch is January 28, 2025. So in a continent hungry for energy security and self-reliance, the AEB aims to be the financial lifeline, bridging, funding gaps and supercharging Africa's oil and gas future. Now, that's your key metrics for today. Now, the Africa Energy Bank is more than just capitalists. Africa's bold step towards an energy secure future is what a lot of people are actually saying this would mean or be. So you can also stay tuned for more insights on this, even as we continue to bring you more details right here on Nairametrics. Next, we look at African market and what it looks like. We'll also continue to track the pulse of the market at 4 p.m. West African time every weekday with Market Pulse here on New Central in partnership with Nairametrics. I'm Lekon Obanjo, and I leave you with Global Market Index.